Hello and good afternoon to everyone that's currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. So with me here today is my colleague William, a senior dealer and marketing executive from Phillip Futures Sdn Bhd. How are you today, William?
Oh, very good. Thank you, Trent. How are you?
Good. I'm good too. Good to have you back here. Okay, so for today's podcast, we'll be discussing on the topic, is the worst over for China market? Okay, so to our audiences out there who are currently investing in China stock indices or interested to invest, do not miss out this podcast. Okay, once again, I would like the help of all our beloved audience to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Okay, so without further ado, let's jump into our topic for today. Is the worst over for the China market? So China market has been one of the best performing market in 2022, despite the lockdown, while other global financial market experienced a heavy sell-off triggered mainly by aggressive interest rate hike and recession fear. Okay, so the China A50 rebounded 15% from its bottom in May 2022. So William, what are the contributing factors for the recent rebound in China stocks market? And do you think this uptrend will continue?
Okay, so China is actually in a very different economic cycles at the moment compared to the rest of the world. So if you remember, China Central Bank, they only reduced their interest rate once only since April 2020, where global central bank, they go into very aggressive stimulus package to boost their economy. So this is the main difference between China and the rest of the world. So now, at this moment, China Central Bank is starting to reduce their interest rate and also to reduce the banks in China of the capital reserve ratio of the banks in China to allow the bank in China to have more cash flow to lend out to the people to boost their economy. While the rest of the world, they are tightening everything where the liquidities, the cash flow of the bank has been tightened up a little bit. Okay, so to summarize this whole thing, China Central Bank is currently easing their monetary policy, while the global central bank is tightening their monetary policy. So this is the main reason why China market is performing this year. So previously, last year, global central bank, they eased their monetary policy. That's why you see the equities market perform really well, but not China. But now everything just turned around. Okay, so I reckon yes, China is back to your question. How is this uptrend going to continue? I reckon yes, because China is likely to continue if the central bank in China further ease their monetary policy.
Okay, so let's see how the China stock market will perform in the coming months. Okay, so for our next question, China property market used to be one of the growth engine of China stock market. However, it has been performing poorly in recent years. So which sector do you think will be the next growth engine of China stocks market?
Okay, so China is a very conservative country in terms of its financial market. Okay, it's not easy for foreign funds to really invest freely in the China market. So it's also one of the reasons why China equities market, they do not enjoy the kind of valuation like the US equities market. It's because of the limitation of foreign fund that can invest. Okay, the regulator in China, they over-regulate their financial and investment environment. Okay, so let us focus at what stocks is in China F50. Okay, because we are talking about indexes, so definitely looking at the component stock is more helpful to us and also more relevant to us. Okay, so we need to ensure that all these component stocks that we talk about has that growth engine to continue to stay bullish on the China indexes market. Okay, so for China F50, since we are talking about the China F50, okay, so the top 5 components, right, they actually consist about 40%. So 5 stocks is about 40% weightage on that China F50. Okay, so the first one is that Guizhou Maotai. The second is that China Merchant Bank, is the banking stocks. So the third one is the insurance, one of the China biggest insurance called Ping An Baoxian. Okay, and the fourth one is a what we call that Wuliangye. It's like a alcohol beverage kind of companies. Okay, the fourth is the industrial bank, and the finally is also a Ping An Bank. So if you look at these 5 company stocks, right, it's either banking or it's either in the F&B. Okay, so these are very these are the kind of companies that don't perform well in the past 1 or 2 years, okay, due to tightening monetary policy, okay, tightening and stuff. So at this moment, since China has been reversing their policy from tightening to easing, okay, to boost their liquidity. So once these stocks has turned from a downtrend or sideways consolidation into uptrend, then likely we will see a very bullish movement in the China F50 market.
Yes, investors certainly need to monitor the higher weighted stocks of the China F50 that you mentioned earlier. Okay, so from a technical analyst perspective, what levels should investor monitor if they wish to trade the China A50 index?
Okay, so China A50, right? They are currently trading at a resistance of the resistance is at 15,000. Okay, that is the resistance. So as long as this 15,000, right, the points turn into its support, it's likely for China A50 to turn into an uptrend. But my own view is that the changes of trend is not going to happen immediately, like today, tomorrow, or even in the short term over the next few weeks. Okay, it requires a few months of consolidation before we can see a concrete uptrend, because 15,000 is really a very big psychology level, and also a level that has been supported last year for probably more than 6 months. So it's a very big resistance. So I think that level is very crucial to monitor.
Okay, so let's see how the market will perform when the prices move closer to that level. Okay, for our next question, what are the potential trade to the China stocks market in the coming weeks that investors need to be cautious?
Okay, so the biggest trade I think is not only to China market, okay, but to global financial market. So the biggest threat is definitely the global recession fear. Okay, if recession truly happen globally, right, I think it would be difficult for China market to avoid the panic sell off too. So which means, in other words, China market will experience panic sell as well. Okay, so the chances for a recession to happen globally, in my opinion, I reckon is 99% off. It's just about whether the market has fully factored in this part of recession yet, which I think not yet. I think not yet 100% factor into it. So traders should really pay very strict to be really strict with their trading plan when trading the markets, because I think the recession fear has not 100% factored into the current financial market. So probably we will see another round of sell-off moment the fear comes in.
Okay, so investors should really look out for the possibility of a recession. Okay, thank you, William, for your sharing, and I hope it will help the new investors out there. And to our audience who are interested to invest in China A50 Index, we are currently having a promotion until 31st December 2022, and clients are able to trade, to enjoy a super low brokerage rate of only USD 5 per lot for the SGX China A50 Index futures. For more details, you can drop us a message on Facebook and our representative will get back to you. And now we have come to an end for today's podcast. If you have any question or any topics you want us to discuss next week, you can message us in the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time too, William.
Okay, thank you. See you next time. Bye-bye.
Bye.